Okay, for this video we're going to focus on the long-time resident tax credit. That's what the IRS calls someone who has lived in their home for 5 consecutive years out of the last 8-year period ending on the date of their new home purchase. So you have to have lived in your home for 5 years in a row during the last 8 years, at some point in time during the last 8 years, and that 8-year period ends on the date that you purchase your new home. You're eligible for up to $6,500 in the form of a tax credit. Again, it's a credit, not a deduction. So tax credit, you get a dollar-for-dollar reduction in the taxes owed, and if you don't owe any taxes, you get the full amount back. Now that tax credit is similar to the first-time home buyers. It's 10% of the sales price up to $6,500, whichever is less. There's going to be very few people that are not taking advantage of the full $6,500, but if you were to buy a home for less than $60,000 as a lateral move from your existing home, then you'll get less than the $6,500. You get to $6,000 instead. This tax credit ends, just like the first-time home buyers, well, you've got to be under contract on or before April 30th of 2010, and you've got to be closed on or before June 30th of 2010. And you don't have to sell your other house. You can keep it. The IRS makes no mention of the need to sell your house. And actually, that makes sense. By design, we're trying to prop up the real estate market. If you're just switching houses, it's not necessarily going to help things. So if you hang on to your existing home and you go buy another home, you can do that and get a $6,500 tax credit. You can also receive this credit in 2010. You don't have to wait until 2011 to get it. So you can file an amended tax return after April 15th to collect your $6,500 credit. Or if you happen to sell your home or happen to buy your new home prior to April 15th, you can add this, the 5405. The Form 5405 is what you fill out to receive your credit from the IRS. You can add that to your April 15th return and receive it this year. And depending on your income situation, you may want to wait until 2011 to receive that. Maybe you think you'll make more money this year than you did last year, and you could use that extra money when it comes time to pay taxes. I hope this is good information for you. If you want more information, there's a link to a what if page, and there's additional information on some of the limitations as far as income limitations with regards to this tax credit. And you can also call the real estate professional that gave you this information. Their number is below here, all the way at the bottom of the page. And you can always get a hold of me at marktap.com. Take care.